With the massive head and shoulders pattern emerging on the daily Bitcoin chart and some new FUD from China, people are starting to think that this may be the end of the bull run. But today we'll look at whether this really is a lot of FUD or something that we should be concerned about. As you can see from the chart of Bitcoin, this is the daily chart, or it's a chart of today, it's the 1 minute chart. As you can see, over the last few hours, we have had this crash where we've gone from around 35k all the way down to around 32.5k in a matter of minutes really. We're recovering, or at least stabilizing somewhat now. We're kind of almost back up to 33k. We still have had another dip that, after the one we just had yesterday, is a little bit more painful, because earlier on it looked like we were recovering back up to around 36k, and then we got hit by this China news that we'll discuss a little bit later, and its real implications over the next few days and weeks. And the fact that we've already dipped below our key support zones, though, both at 33k and at 32,500, does tell me that we're likely to touch 30k at some point. Now again, I hope that this is able to establish support above 33, and then it can make its way above 35, but breaking through this zone twice does tell me that there is a good chance that we will be testing a little bit lower over the next couple of days anyway. So what happened? What caused this? Well, we did have more big candlesticks right here, aka whales are selling. I think they're believed to be Chinese sellers due to these new restrictions that the Chinese government has imposed. So we've got a story about this and why the market overall dipped. So it says, Bitcoin drops as China intensifies crypto mining crackdown. So China added again, its classic thing to cause Bitcoin to crash. So some more FUD out of China, banning it once again. Eventually they're going to run out of ways to ban. We know the reason that they don't just do one of these blanket bans is because, number one, they can't really do it, as we'll discuss a little bit later, but number two, they want to use it not to actually ban crypto. Eventually Bitcoin will be, China allows Bitcoin again, or something like that. That'll be in a few years time. But right now they're banning it so that they can manipulate it to the downside, so that they can acquire cheap Bitcoin, as well as long-term strengthening the position of the digital yuan. These efforts to harm Bitcoin's price in the short and medium term, but long-term they can't ban Bitcoin, which is one of the reasons why they don't just outright ban it, because they couldn't enforce it among the population. I mean, it's decentralized, and they don't want it to look weak. They don't want to kind of give away the fact that they can't actually do anything to stop it. That being said, this is seen as negative news in the short term, so that's why we are having this continued sell-off. Basically, the whole market has been primed. Anytime there's anything kind of a ban, China ban Bitcoin, market goes down, and so people just automatically sell. They don't even bother reading it, they just see that headline and then they sell. So it's kind of a primed reaction. That's why it's happening right now, even though not much else has changed. So the China crackdown has led to a significant decline in Bitcoin's hash rate, or processing power, over the last few days. It says many Bitcoin mines in Sichuan were shuttered Sunday after authorities in the southwestern Chinese province ordered a halt to crypto mining. According to a report from the Communist Party-backed newspaper Global Times, more than 90% of China's Bitcoin mining capacity is estimated to be shut down, the paper said. So it's positive from this that soon there won't be any Bitcoin mining left to ban. 90% of it is gone already, and so once that 10% is gone, there won't be as much impact that China will have on the markets. It's also great long-term to have mining located outside of China, so that it's not under control of a central authority, which kind of defeats the purpose of having decentralized mining. It also makes it easier for Western countries and companies and institutions from these countries to adopt Bitcoin without feeling that they're giving power to China away from the country. So good news, bad news. Bad news is that it has led to this dip, this sell-off in the short term. Good news is that probably with all this extra adoption coming from companies and institutions in the US and Europe, it'll allow Bitcoin to be able to get to 500k faster long term. So instead of maybe 10 years, it could be 5 years. But of course, they're just speculative numbers. So it also says separately, China's central bank said Monday it had summoned Alipay, the payment service run by Alibaba, affiliate Ant Group, and some major banks, urging them to crack down on crypto trading. China had already banned many times financial institutions from providing crypto-related services. So this is what the real fear is about in this latest China FUD. The fear is that if Chinese people lose faith that they will be able to sell their crypto in the future, that may lead to them selling it all at once in some kind of massive panic sell. Now, of course, it's important to stress that that's not what's happening right now. That's not what led to this sell-off. This comes from leverage trading, people seeing negative news, and they take out a short position because they believe the price is going to go down, so they make money, and that in itself, everyone doing that, makes the price go down. So it's more so they're trading off the news, rather than this that would happen over the next few months and years. It also says, however, mines in China often migrate to places like Sichuan or whatever, which are rich in hydropower in rainy seasons. So this shows that it's not, about climate change, that thing that keeps getting brought up every time of why it's good to not have it in China or whatever. It's about helping the digital yuan as well as acquiring cheap Bitcoin. That is the real motives for why they're doing what they're doing. And once you understand that, you'll understand that the worst thing you can do is sell at the lowest price, because that's when they are buying it all up in order to be able to control it over the next decades. That's what they're really thinking about. So in terms of this head and shoulders pattern, this is what everyone is also talking about. The dreaded head and shoulders pattern is a bearish pattern. First of all, what is a head and shoulders pattern? Well, a head and shoulders pattern is a chart formation that appears as a baseline with 3 peaks. The outside 2 are close in height and the middle is the highest. In technical analysis, a head and shoulders pattern describes a specific chart formation that predicts a bullish to bearish trend reversal. So it'll be easier to just see in terms of what people are talking about. So people are talking about kind of here, January, February, the initial run up. Then we kind of had the head, and this is the shoulder. And if this was to play out, then we would get another dip. And this is where that dip to potentially down to 20k or whatever, that's where it comes from. And as I've said in the past, a move to 25k or even 20k under bearish circumstances in the short term is possible, which is why it's very dangerous to be opening long positions or really short positions in this market. But if you're not trading, then looking at these head and shoulders patterns can end up hurting you more than helping, because you start to focus on things that you're not an expert in. You end up selling at the bottom and buying back in at the local top of 40k. People have been talking about this pattern for weeks and it still hasn't materialized. Now that doesn't mean it won't, but it just goes to show that the people who thought it was going to happen imminently back on May 20th after we had the big sell-off on May 19th, those people sold at the bottom of the market at 30k or whatever, and right now they still have lost out, because even though the price has crashed, it's still at 33k right now, and they also missed that massive run up to 40k. So unless you're trying to trade it, you probably shouldn't put too much emphasis on this, because long term it doesn't change anything in 6 months time or in 12 months time. It just means that it would be more turbulent in the short term. And just remember that while this isn't exactly FUD, this is technical analysis, it can have the same effect in terms of being detrimental to retail traders, because so many retail investors just hear about head and shoulders or the death cross, and a month ago they just panic and then they sell it like 30k at the bottom, when in reality if they just bought and hold and stuck to their strategy, then they would have made money eventually. So that's why, unless you're planning on spending all your time trading and studying these patterns, if you think you're buying or selling because of these, even though you don't usually rely on technical analysis, you just saw some chart on Twitter, then you're likely going to do it wrong. And even if you think you're logically making decisions, it's underneath it probably really just fear, which is the exact emotion, along with greed, used to control retail investors when markets are turbulent like right now. So what should you do? Well, Michael Saylor, the answer for him was to buy more Bitcoin. In the last couple of hours, MicroStrategy has announced that they are buying more Bitcoins. It says MicroStrategy has purchased an additional 13,000 Bitcoins for $489 million in cash, an average price of 37,000 Bitcoin. So now they have over 105,000 Bitcoins, which is just an insane amount. Buy and hold, that's what one of the biggest investors in Bitcoin tries to do. He's not focused on timing the head and shoulders or the death cross perfectly. He sees a dip, he sees it as a buying opportunity to acquire more cheap Bitcoin and to not lose on the Bitcoin that he already has by just panic selling, even though he is in a profit because the average price is $26,000. So that's why it's useful to look at what he's doing, because he is an example of a transparent whale. He's not exactly a whale, because whales would manipulate it to the downside, and I don't think a public company is going to be manipulating it to the downside. This is exactly what's happening behind the scenes in all the hedge funds and banks and corporations who missed the boat. They are having a party because they are able to buy cheap Bitcoin at these prices. Why? Because they're not focused on the short term. They have the long-term vision. They're okay slightly overpaying because they believe long-term the price of Bitcoin is going to go much, much higher. It's a great deal compared to where it's going to be over the next 10 years, because if you plan on holding onto these cryptos for 3 to 5 to 10 years like these institutions do, then you're going to make 10, 50, 100x gains no matter what. And it doesn't really matter to Michael Saylor that he paid 37k instead of 32k. Sure, he'd like it cheaper, but he knows that following his strategy and getting bogged down in other people's strategies isn't going to work. That's why he just buys as much as possible and holds on for forever, which eventually will pay off in a big way. That's what he believes anyway. So what is the takeaway from all of this? This stresses the importance of having a strategy that you should stick to, otherwise you shouldn't be in crypto. because the whales who have the month-long plans, the year-long strategies, will take all your crypto eventually, even if you get lucky for a period of time. You might not want to wait 5 to 10 years like Michael Saylor, and that's absolutely fine. I still think that even if we do break past 30k to the downside, we're still in an accumulation phase, and the data supports that. Remember the Wyckoff accumulation that everybody was talking about for like 2 days? We are still on track for Wyckoff accumulation, even if we have another dip. We have a lot of time to play with over the next few months. Look at the chart. You know, people are talking about how, oh, we've reached the selling climax. Well, what they conveniently didn't look at was how there's a secondary test that could be a bit lower, and then there's a spring, which is the biggest test that we'll look at in a second about why that's where the real manipulation is, that's even lower than that. So it is possible, and it's completely normal that even, let's say this accumulation period lasts for 4 months, that we could see another lower dip before we start trending back upwards for the next leg of the bull run. That doesn't mean that we have to break 30k, but even if we did, we'd still be right in line with the Wyckoff accumulation period. The feeling that this is the end of the bull run, that you're just getting exhausted, that you were alright for the first month and now it's getting a little bit more tired, that's exactly what you're supposed to be feeling right here, because that's the whole point, to exhaust the retail demand over time, both in terms of when it's going up, but also on the downside to just make people tired and make them sell. So as you can see down here, they kind of lay it out on this website pretty well. So it says the secondary test, which is this first lower phase in phase B, is where the price revisits the area of the selling climax to test the supplier-demand balance at these levels. If the bottom is to be confirmed, the volume and price spread should be significantly diminished as the market approaches the support in the area of the selling climax. It is common to have multiple selling secondary tests after a selling climax. But the shakeout or the spring is what you should be really focused on, because this is where the biggest manipulation is. It's like the last push, that's why it's a little bit lower. It's the last push that they use in order to be able to get out the maximum amount of retail money sell at the lowest point before the longest leg up. So it says shakeouts usually occur late within a trading range and allow the stock's dominant players, the whales, to make a definitive test of available supply before a markup campaign unfolds, before the next leg of the bull run. A shakeout or a spring takes the price below the low of the trading range. That's essentially showing people, oh no, it's over, we're going even lower. That's exactly what you're going to see more than likely at some point before we get to the highest point yet again. And then it reverses to close within the trading range. This action allows large interests to mislead the public about the future trend. Again, once people see, oh no, it's broken past 30k, everyone thought that was the bottom, now it's really over, then those extra people are going to sell. So it's in order to shake those people out, so that they can mislead the public about future price trend direction and to acquire additional shares at bargain prices. A terminal shakeout at the end of an accumulation trading range is like a spring on steroids. Shakeouts may also occur once the price advance has started, with rapid downward movement intended to induce retail traders and investors in long positions to sell their shares to large operators. Does that sound familiar? However, springs and terminal shakeouts are not required elements. That's why we're saying that this stuff isn't a guarantee. It's just, it could happen. So be aware that we could test lower prices for Bitcoin before we eventually do make our way to the next leg of the bull run, which again, will probably not happen next week. It's not going to happen next month. It'll probably take 2 or 3 months to get back there. But as long as you kind of just wait it out, that's what I think is the best strategy. I still think that we're going to see another altcoin season this year, and I still think that Bitcoin is going to set a new all-time high. ADA, DOT, Harmony, Polygon, Ethereum all have ridiculous gains left to make with a massive price catalyst to come, and that's what I'm keeping in mind going through these times. If you want to join my private Discord where I share daily market updates, altcoin gem research papers, private live streams every week where you can ask me questions, as well as buy and sell posts and monthly portfolio updates, then join my Patreon linked in the description. I will be closing it again soon in order to keep the group small and the quality high. Enjoy the rest of your day, and I'll see you in the next one.